Kevin, when you think about USDC, we've talked a lot about the yield component and thinking of it almost like an investment asset that you can drive that yield on. Is there a world where if you could convince the partners or the customers or your kind of business transaction participants to take USDC, would you move a material part or 100% of all of your wires and kind of legacy banking infrastructure payments to something like USDC where you could do it more instantaneous, cheaper, faster, et cetera?
Yeah, of course I would, but I can't do that now. I mean, let me explain what the potential, from my point of view as a user of the product. One of the greatest frustrations that I've articulated over the last couple of years is what I do in foreign markets on equities. I have an index that involves 50 large cap European stocks that unfortunately, or fortunately, whatever you want to say, are in three different currencies, in Swiss francs and euros and British pounds. One of the largest friction points for me in rebalancing these indices is the fact that I have to go back and forth through FX costs for friction of FX trading. If regulators could get behind a digital payment system that would allow me to own the securities in, let's say, USDC at a price that's completely transparent and liquid, I could avoid that friction in perpetuity. And it would be a much more efficient way to do business to settle in a universal digital currency. Now, I know that sounds, euphoric, but ultimately we need to get there. And the US dollar today is that currency. It still is. Many people speculate its future, but for hundreds of years, it's been the currency that people settle on for all kinds of commodities and services. It's very inefficient for what I'm doing in these markets to pay these FX costs, which vary by the hour, and I see no value added. And so, to me, let's get moving. Let's lead the world in this process and this efficiency. I hate the idea that our regulator would hold us back against innovation when clearly it's needed. And on the baseline of USDC, which there are rules for money market funds. When you go to cash in your brokerage account, you get swept, if you wish, into a money market account that has rarely broken a buck. And there are rules. I see no reason we can't apply that kind of regulatory environment to USDC and have that settle that way. And of course, I would put more into it because I don't know where rates are going to be once the regulator rules on USDC. They probably go down. You're not going to get 6% anymore because there'll be a flood of institutional demand. But it's going to be better than what I'm getting on US cash, is my assumption. And in addition to that, could be far more efficient as a payment system across a wide range of different uses. I mean, the use cases here are very broad. And so, one way to look at it, and I've tried to convince in my own conversations with regulators, and most of us have these ongoing dialogues in our day-to-day business, to start thinking about USDC as software, really efficient software. If you're willing to invest in Microsoft, and I've said this before, in Google, why aren't you investing in software that has such promise? And that's basically what, in my view, it's a personal opinion, but when I invest in Circle as a business, I'm investing in software that provides tremendous productivity and efficiency in a business I've been in for decades, financial services. And the same for the chain, for all of the other investments I'm making in cryptocurrencies, coins, tokens, and blockchain itself. It's software to me. And I think it's a necessary investment. And I hope that our regulators see that we should lead the world in developing these protocols and these standards and help us do so.